Hi, this presentation will be a short overview of the effects of MAP changes on flood insurance. There are basically four that we'll be discussing in this presentation. First, there will be properties that are newly identified to be at a high risk. In other words, on a flood map, they may have gone from a zone X to a zone A or AE. Then there will be those properties that are already at a high risk, but now have been identified to be at even a higher risk, where the flood zone has changed on the flood map from a zone AE to a zone VE on the coast, or we've seen an increase in the base flood elevation, which is the height that the flood waters will reach during that 1% annual chance flood, or will exceed them. And then there will be those properties who are newly identified now actually to be at a lesser risk, at a moderate or low risk instead of a high risk. So they've gone from like a zone AE on the flood map to a zone X. And finally, many people will not be affected by the maps. However, it's a good time to check your flood insurance. So this is what we'll discuss today. There are three rating options. The first one is called a newly mapped procedure, and that is just as it sounds for properties that are newly identified to be in a high risk area. In those cases, you can actually, instead of paying the higher risk premium, start at a preferred risk rate where premiums start as less than $350 a year, but that must be purchased within the first 12 months after the MAP becomes effective. And you must qualify for a preferred risk policy, which basically means be almost claim free. The next opportunity for rating is for those who are already at a high risk, or maybe didn't qualify for the newly mapped procedure and are not even at a higher risk, where they maybe have gone from a zone A to a zone V on the coast, or as mentioned earlier, that increase in base flood elevation. Two types of rating options your insurance agent will be looking at is one thing called continuous coverage, which means you have to have coverage in place before the maps become effective and then maintain it through the life of it. Now that policy can be transferred over to a new owner, so keep that in mind. If for some reason that is not done, there is still another rating option called built-in compliance, but that is only for buildings that were built after the first flood map, because they'll have to go back and show that they were built in compliance with the flood map in effect at the time. So this grandfathering helps lock in that lower risk zone or lower risk base flood elevation. But as mentioned, there will be those who were identified to be at high risk on the current flood map, but when the new one comes out, they're actually identified now to be at a moderate or low risk area. So they've gone from a zone A to zone X. And so what the insurance agent can do there is convert the higher risk policy to a preferred risk policy, and you actually get a refund back. So let's look at the different scenarios. The first one is mentioned was newly identified to be at high risk, where you were in a zone X and now you're in a zone AE, a higher risk. When that happens, the federal mandatory purchase requirement kicks in. If you have a loan through a federally regulated or insured lender, they are going to require you to show evidence of flood insurance. And if not, they will force place it, which could be quite costly if you don't purchase in advance. So what FEMA offers is a cost-saving option known as that newly mapped procedure that we just discussed. It's where you start with the lower cost preferred risk rates, and it has to be purchased within 12 months after the effective date. And then you will slowly go up no more than 18% a year until you reach a full risk rate. So lots of stepping stairs that you will go up until you finally get to a higher rate many years later. Note that there is an exception for that 12-month period, that an additional 12-month period is there if a lender required it after that first 12 months. Whatever we do, we ask you to buy the preferred risk policy now. If it's preliminary maps, you just got to identify this, because Mother Nature is not going to wait to flood till the map becomes effective. You've already been identified now at high risk, get that preferred risk policy. And it also could result in some cost savings. As mentioned, there will be cases where you're already in a zone AE, and on the coast, you find that you're now in a zone VE for velocities. As mentioned, the federal mandatory purchase requirement is there for those who have federal regulated or insured loans. FEMA provides that cost-saving option known as grandfathering, where you lock in that lower risk zone, that zone AE, which has lower rates for future rating. Now, you're not going to lock in the rate itself, but the flood zone for future rating. Again, pre-firm buildings, those built before the first flood map of that community, must have coverage in effect before the new maps become effective to take advantage of this grandfather rating option. There will also be cases where that base flood elevation that we find is actually the floodwaters are going to be higher than initially identified on the map. And again, in those high risk areas, the mandatory purchase requirement is there. But to keep the cost down, FEMA allows you to grandfather or lock in that lower base flood elevation for future rating. Again, you could use those lower rates associated with the lower risk BFE. Again, pre-firm buildings, please have the coverage in effect before the maps change. And that's just a good idea across the board anyway. Finally, there are those that are no longer identified to be at high risk. They used to be in zone E, now they're in zone X. And when that happens, the mandatory purchase requirement goes away. And so that you'll get a letter from the lender who says you are no longer required to have it. That does not mean you're not required to, that you don't need it anymore, because in fact in Georgia, over a third of all the flood claims occur in the moderate to low risk areas, and those are people who did have flood insurance policy. So the flood risk is reduced, but it is not removed when this happens. So what we encourage is for you to have your insurance agent or company convert your higher risk policy to the lower cost preferred risk policy. And in that instance, you'll get a refund back, you'll get coverage in place, there's no gap in coverage, and you automatically get to include contents coverage. The bottom line is we want you to keep your home and contents protected to protect the life you built. Why? Because there's still a risk, it's just reduced. Finally, there's going to be cases where there's no change in base flood elevation or zone, but you're still at risk. And so what we'd like you to do is make sure you have flood insurance, and if you do, is it current replacement cost? If it's only the amount that the lender required, there's a good chance it won't be at replacement cost, and you probably don't have contents covered. So talk with your agent about what the right option is for you. And if you don't have any coverage, you may be in Zone X and therefore qualify for that lower cost preferred risk policy. So in summary, if the risk is increasing, FEMA has money-saving options known as grandfathering or the newly mapped procedure. If there is a decrease in risk where it's gone from like a zone A or V to a zone X, the risk is reduced, but it is not removed. So have the agent convert your existing policy to preferred risk policy and get a refund and maintain coverage. But finally, if there's no change, just pull out your policy and take a look and make sure you're fully covered, both contents and building. And if you don't have coverage, maybe you qualify for a preferred risk policy. Whatever, protect the life you've built. Consider having flood insurance. Make sure you're covered. If you need more details, talk to your insurance agent or visit floodsmart.gov.